Now, the presentation tonight is things I wish I knew about money, and it is a combination of the most significant financial lessons that I've learned in 2023. Okay, so the topics include, well, first of all, we are going to compare different types of cash apps. Okay, if you're using Rise, if you're using Versa, you're using Touch and Go Plus, you may be wondering whether these apps are still feasible or usable or not. So we will take a look at the most updated earnings rate and compare them one by one. And next up, we'll move on over to the power of compound interest. Now this one, obviously, all of you guys in this room today, you may have already heard about it, okay? But very often we underestimate this concept. Okay, so I'm going to show you guys a few examples and a few projections. Then we'll move on over to the rule of 72. And this one is actually pretty simple. It's a formula that can help you accurately estimate how long it will take for your funds or your investments to double in value. Fourthly, we will take a look at retirement. How much is really enough to retire comfortably in the next 20 to 30 years? And then after that, I will also show you guys a detailed table of projections so that you can figure out whether you are on track to achieve this target goal or not. And last but not least, how to position your investments in 2024. Now, it has been a week already since 2024, and some of you may be wondering, how do I start off my investments at the right foot? Well, we've come to the right place, and this is obviously probably a good start for your 2024. So as usual, the session is not financial or legal advice. So without further ado, let's dive right into the first topic of the night. So this is a list of the cash apps currently in Malaysia, and obviously it is not exhaustive. There are still many other places out there that you can earn passive income, but here are the few notable ones, okay? And let's go through each of them. First of all is Rise. This one is actually a banking app / savings app, meaning that your funds are actually protected by PIDM and you can deposit and withdraw instantly. Now, this is why Rise, a lot of people put money into Rise because it is so attractive, right? And the earnings rate is pretty high, 4% per annum on any amount. Meaning today, if you successfully registered an account with Rise, you just put the money in, and every month, during the start of each month, they will pay you out as a lump sum. Okay, obviously, the payout frequency being once a month is a bit of a con. And another big con, which I didn't write over here, is that the customer service of Rise is very questionable. It's horrendous to say the least, okay? And in December itself, many users reported issues with the app. Transactions were not going through, payouts were not on time, and if you're a Rise user, you may have experienced this. So therefore, if you guys are interested to register for this banking app, use it at your own risk and make sure you don't put all of your eggs in one basket. The next one is Versa. Versa is also pretty well known, 4% per annum on your first 30,000 ringgit, which by the way, Versa currently has two products that offer 4% per annum. Okay, so first is Versa Cash, which is not Sharia compliant, and the second one is Versa Cash I, which I wrote over here, which is Sharia compliant. Now the thing about this is, if you have 60,000 ringgit today, 60,000 ringgit, you can effectively split the first 30,000 ringgit to Versa Cash, and the remaining 30,000 ringgit to Versa Cash I, and you will earn 4% per annum for your entire sum. So this is a bit of a cheat code over here. Deposit and withdrawals 1 to 2 business days, because this is a cash app. It's considered as an investment, therefore it's not insured by PIDM. Next is KDI Save. Some of you guys may be familiar with KDI Save also, but I personally do not use this app. Many users, they've told me that, hey, KDI Save is nice, they pay you out every day, 4% per annum on your first 50,000 ringgit, but the layout is not as simple or as sleek as Versa or perhaps Rise. So if you use KDI Save, do let me know your comments and your thoughts of using this app. And by the way, it is also not Sharia compliant. The fourth one is StashAway. StashAway, probably everyone has heard of this before. Apart from their simple portfolio, they also allow you to build your own custom portfolio or invest in their different types of portfolios, aggressive, medium or conservative, etc. But let's focus on their simple portfolio. 3.8% per annum, there is no maximum limit, but this rate is projected. So just now the three apps that I talked about, is net rate, meaning that if you deposit 10,000 ringgit within 1 year, if the promotion is still running, then you expect to earn 400 ringgit. But in the case of Stash Away Simple, right, if you put 10,000 ringgit in and 1 year later you don't earn 380 ringgit, you cannot blame them because it is projected. Deposit withdrawals 2 to 3 business days, payout frequency is daily, not protected by PIDM because it is similar to KDI Save and Versa Cash. These are all considered as investments. And lastly, we have Touch and Go over here. This is the classic. So today, everyone is using e-wallet to pay for everything. And if you're using Touch and Go and you have not activated the Go Plus feature yet, then you're really missing out on a huge avenue to earn passive income. So first of all, this 3.5 to 3.6% per annum earnings rate is only applicable to up to 9,500 ringgit. So there's a limit over here. Which means today, if you max out your Touch and Go, 9.5k, every day you will earn about 90 to 92 cents. And in 10 days, you will earn 9 ringgit, which can easily afford you a glamorous nasi lemak or perhaps a noodle in a hawker center. Okay? So deposit and withdrawals instant. This does not affect your ability to make e-wallet payments. If you put money inside Touch and Go, Go Plus in particular, whenever you make a transaction, deposit or withdraw, they will just deduct your balance immediately from this Go Plus account. Plus, they pay you out every day. So let's talk about which apps I'm currently using. So Rise goes without a doubt. I'm using it for my daily spending and savings because deposit and withdrawals is instant. Next, Versa Cash, I tend to use it for longer term savings, 3 to 6 months. I put a bit of my emergency savings there as well. KDI Save, I do not use it. Stash Away Simple, I use it a bit just to diversify my holdings. I don't want to put too much into one single app itself. Don't want to commit too much into one app. And finally, Touch and Go, right? Also similar, up to 9,500 ringgit for my flexible savings and daily spending. And apart from this, I'm also currently dabbling into ASM. So I'm not a Bhumiputra, as you can hear from my voice, okay? But if you're a Bhumiputra, you definitely want to make sure you take advantage of ASB. Okay? Because ASB itself, it is a fixed price unit trust fund, and the returns have been very consistent in the past 10 to 20 years, averaging 4 to 6% every year. Similar to ASM as well, so the closest alternative to ASB is ASM for non-boomies. Their payout average 4 to 6% per annum, and I didn't include it in the presentation today. But anyway, if you guys want to learn more about ASB ASM, you can still ask me during the Q&A session, and we'll talk more about that. Now let's talk about compound interest, a concept that is widely known but often underestimated. So let me just give you a quick example over here. Say currently you're investing at a 5% annual return rate compounded, and you have a time frame of 30 years, and every month you consistently contribute a fixed sum. Okay? And within this time frame itself, if you put in just 100 ringgit per month, you will have about 83,550 ringgit after 30 years. Okay, some of you may say that, well, not bad, 100 ringgit per month only, not a lot of commitment, then I get 83,000 ringgit already. What if you 5 times your savings? If you save 500 ringgit per month into an asset that compounds 5% per annum, now it starts to add up about 420,000 ringgit. And you start to see the pattern over here, right? 1,000 ringgit per month, you could almost retire as a millionaire already. And finally, the most important figure over here, 1,500 ringgit per month, you retire with 1.25 million. So, for those of you guys in the audience, if you're about 20 to 30 years away from retirement, you want to contribute somewhere between 1,000 to 1,500 ringgit to your investments. Then you're guaranteed to retire as a millionaire, very likely. And the part about this, when considering about the contributions over here, right, you must also factor in contributions from your employer and yourself also, EPF contributions, because it's totally understandable if you want to save 1,500 ringgit per month manually. It's very difficult for a lot of people. Now, saving 500 ringgit per month from your salary is already quite impressive, considering Malaysia's median salary of 2,600 ringgit. So again, as long as your EPF contributions, mandatory from your employer and you, plus your own savings, exceed this 1,500 ringgit per month, then you know you are safe. You will definitely retire with this amount or more. Okay, so this really highlights the power of compound interest itself. And by the way, by the 30th year, if you maintain this 1,500 ringgit contribution, you consistently add every month, your total capital by the 30th year is 540,000 ringgit. But the interest you earn is 700,000 ringgit, over 700,000 ringgit, significantly higher than your initial contribution. And this reflects the power of compound interest. And it starts off very slow, right? Year 0 to year 10, like macam tak ada any result like that. But year 10 all the way to year 20, right, you start to see how compound interest works for you. And by year 30, your capital would have more than doubled. Okay, so again, this highlights the importance of starting early and just save whatever you can as soon as possible. Now let's move on over to the rule of 72, which also relates to compound interest a bit. Now this is just a very simple formula which estimates how long it takes for your funds to double. You take 72, you divide it by the rate of return, then you'll get the number of years. So here's a table. So 72, you divide it by 4, then it takes 18 years for that funds to double. Okay, so give you an example. Let's say you have 5,000 ringgit right now. You invest in an asset that gives 8% return every year, pretty high. Okay, that's roughly the S&P returns are 8 to 12%. And within 9 years, that 5,000 ringgit will duplicate itself, become 10,000 ringgit. So bear in mind, the rule of 72 over here also applies to inflation. You can find out how long it takes for your money to be slashed in half. So let's say at a mere 2% inflation rate in Malaysia, you take 72, you divide it by 2, then it takes 36 years for that money, that dormant money in your bank account, to be slashed in half. So this formula also has its own drawbacks. Okay? Drawback is that it assumes that you do not add or withdraw any capital throughout the investment. Okay, so if you add or withdraw anything, then you can no longer use this rule of 72 lah. You have to use a compound interest calculator to estimate your future returns. So now talking about future returns, just now I spoken about the 1 million ringgit required to retire. Now this figure is actually important because back in 2022, the Star published this article, and I can say it is eerily accurate. I've done the calculations. I'm going to show you guys in the next few slides. Okay, the Chief Strategy Officer, he said that those people who are planning to retire in the next 20 to 30 years will require at least 1 million. Now, 1 million is obviously a huge amount, an enormous amount that some of us cannot fathom. And if we assume that EPF pays 5% per year, every year you will earn about 50,000 ringgit in dividends, which if you divide it by 12, every month you will have about 4.2k if you run it up, okay, in dividends from EPF. Now 4.2k for retirees every month right now may seem like a huge sum, but we have to take a look at Malaysia's average inflation. So this is the projection. Okay, this is the data itself lah. From 2002 to 2022, okay, the average inflation in Malaysia was 2.15%. And may seem like a very small figure, right? But if we project it forward for 25 years, 1 million ringgit in the next 25 years is worth about 587,000 ringgit in today's money. So, meaning this dividend paid by EPF, about 4.2k every month, is equivalent to 2,450 ringgit today. So just ask yourself lah, if today I retire, is 2,450 ringgit enough for me or not? Well, most of you would definitely say no. But according to the Belanjawanku study, the latest study, they say yes. Those senior people who are single, they require about 2.5k per month to survive in the Klang Valley. Assuming that they have no commitments, no debts or whatever, they only pay their rent and live on food. Okay, so this is why 1 million ringgit may just be the minimum required to retire in the next 20 to 30 years if we follow this modest inflation rate of 2.15%. Now some of you may take this time to open up your EPF iAccount app, and you're looking at your EPF account balance right now and wondering, oh my god, I'm so far away from 1 million. How do I even achieve 1 million within this time frame? Well, don't worry, I've compiled some data over here. This is the average EPF savings of each age group. Okay, it's a bit complicated, but all you need to do is focus on your age group. Okay, so let's say like me, you're 27 this year, that means you belong to this age group, right? And the average savings of people in this age group is 14,000 ringgit. So therefore, if you look at your EPF account right now and you have much higher than 14K, congratulations, you are well ahead to hit this 1 million target by 55. But if you are somewhere at this range, then you know you have to contribute somewhere between 1.2 to 1.5K every month in order to reach 1 million by 55. This is assuming that you invest in an asset that generates 5% return every year. But what if you're older? Okay, let's say you're in this age group, or perhaps in this age group closer to retirement. In that case, 1 million ringgit is not required. The more recent figure is 600,000 ringgit. Okay, because we factor in inflation as well, etc., right? So in this case, let's say you are 46, okay, you have about 120,000 ringgit or 115,000 ringgit in your EPF account. You will have to contribute somewhere between this sum in order to reach 600,000 ringgit to retire comfortably by 55. Okay, so hopefully this will give you a good idea as to where you guys are standing in terms of retirement right now. And maybe some of you guys may be afraid. And if you want to simulate your own calculations over here later, I'll send you guys this table plus the compound interest calculator. So now, talking about EPF itself, right now it's really easy to voluntarily contribute to EPF. All you need to do is download the iAccount app, which I'm sure most of you guys have it in your phone right now. Scroll down and select increase your savings, and the minimum contribution is just 10 ringgit. And by the way, this contribution itself is a one-off. Let's say this month you contribute 500 ringgit to EPF voluntarily. And then the next month you're afraid that it will auto-deduct. No, it won't. It's a one-off thing. And if the next month or the following month your budget is a bit tight, you cannot afford to contribute, that's entirely fine. You can contribute whenever you feel like it. And the plus point to voluntarily contribute to EPF is tax reliefs. So EPF, the LHDN offers a 4,000 ringgit tax relief for voluntary and mandatory contributions. So this means that as long as your wage is somewhere between 2,000 or 3,000 ringgit, you are most guaranteed to receive this initial 4,000 ringgit tax relief from LHDN, okay, through your mandatory contributions. But on top of that, in 2023, LHDN also provided an additional 3,000 ringgit for voluntary contributions. So, if last year you voluntarily contribute to EPF any amount at all, make sure when you report your taxes this year, utilize this tax relief. And by the way, this tax relief itself is separate from the relief provided by PRS. PRS is another 3,000 ringgit. So really there's no excuse not to voluntarily contribute to EPF. At least try and max out this 3,000 ringgit so that you can reduce your total chargeable income. Now let's move on to positioning your investments in 2024. Now instantly you'll be a bit confused. Why am I talking about the OPR? Well, this is a very important question or perhaps an important statement. If today or the last few years you take a look at your investments and they are earning below the current OPR level, which is 3% set by Bank Negara Malaysia, you need to reassess your investment strategy. So I'm going to repeat myself. If your investments last year and this year is earning below 3%, then you need to take a look at your investment strategy again. Why? Because this is the benchmark set by the Central Bank of Malaysia, and banks, they use this to set the rates on their loans and deposits. In fact, if you take a look at banks right now, fixed deposits, they are offering much higher compared to the current OPR. It's 3.6 to 3.9%. Just now I also talked about ASB and ASM, all these conservative funds. They are offering 4 to 6%. Cash Apps, Versa, Rise, Stashaway are all offering much higher compared to 3%. So therefore, if you are investing in any funds, they tell you that, hey, you know, this fund, 2% return every year will cover inflation. Yeah, it may be time to switch a bit and make sure you get a slightly higher return compared to the current overnight policy rate. So to position your investments in 2024, just 3 things. First of all, you must determine why you are investing. What is the goal? Okay, let's say you're planning to save for a down payment for your house, or you're planning to save for a down payment for your car. Maybe you're saving up for a wedding, or you are investing for retirement. So these 4 things are 4 separate goals, You cannot just bundle them up together and then invest as a lump sum. No, they are completely different. And then adjust your risk profile according to your time horizon. So let's say, like the first example, you're planning to save up for a down payment for your house in the next 5 years. In this case, your risk profile should be closer to that of a retiree. It wouldn't make sense for you to go into very risky assets such as, a crypto, all-in crypto, or all-in this IPO or whatnot, right? Because you want your money to be worth the same or more when you need them. Therefore, you should opt for lower risk investments if your time horizon is much shorter. And lastly, allocate your cash and never get greedy or go overboard. So let's say you're planning to invest for retirement, and then you plan a 70-30 portfolio. 70% equities, 30% bonds. And this year, you are very positive about the US market. You believe the S&P will rally 30 to 40%. Well, most of the people will get greedy and say that, let me just go 100% into S&P. Yeah, never do that. Because in the event that the S&P or the asset that you have allocated heavily in underperforms, then you'll definitely cry. Okay, so risk management is very important. Make sure you determine your own risk profile and stick to it. So just some additional tips over here. These are the returns that you are supposed to aim for. If you're a conservative investor, now this normally applies to those people who are closer to retirement or they have a shorter time horizon. Like I mentioned just now, saving for a down payment for a house, saving for a down payment for a car, or perhaps a wedding, then maybe you want to opt for conservative investments. And just now I also talked about all the range of conservative investments that you can consider. I just repeat myself, ASB ASM, RISE, all those cash apps, bonds, Malaysian government securities, they're offering somewhere between this range. A moderate, here is when you add in a dash of equities, a bit of stocks, right? A bit of banking, local banking stocks, Maybank, public bank, maybe some blue chip stocks in the US, or maybe even some ETFs from the US that track the US market, right? Then you're a moderate investor. You try to aim for 4.5 to 7% per annum. And finally, aggressive investors. This one is a tiny bit YOLO. You YOLO a bit part of your portfolio. Some of it goes to IPOs. Some of it goes to very new tech stocks, new companies, a bit of crypto as well. Then you try to aim for a return that is higher than 7% per annum. But most importantly, whatever portfolio that you aim for, you must have a bit of conservative or moderate assets. In the event that your volatile assets underperform, at least there's an anchor over there that can help you get some return every year. Okay, so that brings me to the end of my presentation tonight. It's short and sweet. Hopefully you guys learned something. Let me quickly just summarize everything I talked to you guys. It's actually a mouthful, okay? And then we will transition to the Q&A session. First of all, I compared different types of cash apps just now. I'm going to show you guys again, right? This is RISE, etc., all those. The highest earnings rate in the market right now is 4% per annum. Okay, it's actually a pretty good deal. And then after that, I transition into the power of compound interest. And the lesson here is to start saving as soon as possible, no matter the amount. Right? Rule of 72, you take 72, you divide it by the rate of return, then you get a number of years for that particular fund to double in value. How much is enough to retire in the next 20 to 30 years? 1 million. Okay. And to see whether you're on track or not, later I'll send you guys the table. Positioning your investments in 2024, and make sure you have a goal, determine your risk profile, and then just allocate your cash accordingly. Okay. Meanwhile, let me just do a quick shout out to all our supporters, our patrons for your undying support throughout the year. Andrew, Wendy, Edward, Alex, CC Is, Urshad, Caveman Balls, Kelvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, Lufeni, and Will, as well as all of our learner members. Let me just take a look at your questions. Hello, what has happened to Bitcoin recently? Very volatile. Okay, let me just do a quick explanation on what's happening to Bitcoin. Well, first of all, for those of you guys who are new to Bitcoin and are interested to dabble in this cryptocurrency, you have to understand that this is a very high risk asset, and fund managers out there, they generally don't recommend if you have an exposure of more than 15 to 20% if you're a high risk investor. Okay, so if you're a super high risk investor, right, the most that you can allocate in Bitcoin is probably about 10 to 15%, up to 20% of your portfolio. That's all. And if you're conservative investors, these fund managers, they recommend about 1 to 3% exposure in Bitcoin. That's more than enough already. So now about Bitcoin, right? We take a look at the price. Yeah, it has just skyrocketed, right? Ever since October last year, went up about over 100% now, okay? On a year-to-date basis, I think we did a talk about it also. Since January last year until January right now, is up 166%. Well, why is this the case? Well, recently, over at the US side, there's a lot of speculation that the US SEC, which is like the SC in Malaysia, Securities Commission Malaysia, so the US is SEC, Securities and Exchange Commission, they are rumored to very likely approve a Bitcoin spot ETF, an exchange traded fund. And that got a lot of investors riled up, and they're very confident that by the first quarter of this year, a Bitcoin spot ETF will be approved by the SEC, which is why every time you see a slight dip in Bitcoin right now, a lot of people are buying back because of this rumor itself. Okay, so that's a bit about Bitcoin. It's a very volatile asset. If you want to dabble into it, yeah, definitely you can, but make sure you don't go overboard. Make sure you manage your risk accordingly. So go invest. Is it worth it to invest or not? Now, personally, I can just tell you straight up, I only put 1,000 ringgit into Go Invest. And the Go Invest, right, I put into the Go Invest Save feature. So you got to understand, in Go Invest itself, there are two types of features. There is Save, and then there is Invest. Okay, so the Save one, right, the Save one, let me just see. Okay, so Save one is right over here. So this Save one, right, the returns is 3.95% excluding fees. Okay, so the fees itself, they have no upfront costs, but they do have like a management fee of like 0.4% per annum. Okay, so you can see over here, projected return rate, they did not state over here, but yeah, it's 3.95%. And there are also fees over here. I'm just using it just to try things out a bit. So that's a bit about the Save feature of Go Invest. Then you also have the Invest feature. The Invest feature in Go Invest itself, right, they have a variety of different types of funds. I think they have like 9 or 15 funds like that. But bear in mind, whenever these type of platforms offer different types of funds, right, you have to check out the fees, the annual fees. And if they're higher than 2 to 3% every year, right, then it's really not worth it. If they show you that the projected return rate is 10% per year, but then the fees are 2 to 3% every year, then effectively you're just earning 7 to 8% every year. And plus the returns, when you put inside Invest, right, the Invest feature, right, it's not guaranteed. And sometimes the fund may underperform, and at the end of the day, you may lose more money. So make sure if you want to dabble into Go Invest's Invest feature, you check out the fund itself, and then you take a look at the fees. Okay, because each fund have different types of fees, which I saw just now. If I can see, right here. So Save feature, where is it? The Save feature, 0.4% per annum and 0.02% per annum. Okay, management fee and trustee fee. So if they indicated there that the Save feature allows you to earn up to 3.95% per annum, then you have to deduct this, right? 0.4 and 0.02. So if you deduct it, then the earnings rate will be, let's see, 3.53%. And in that case, why not just put inside Go Plus, right? Okay. So as for other funds, make sure you check the fees, okay, because those fees really add up. For gold investment, considered conservative, moderate, or aggressive, for example, public gold. So this is a bit debatable. Gold, some people say it's high risk, some people say it's low risk, some people say it's a stable asset or whatnot. But I would say it's an avenue to diversify your portfolio. Okay, and it's typically used as a hedge against inflation because over the years, gold has typically outperformed inflation. But there's a huge but over here. It depends on when you invested in gold. So let's say you were a super believer in gold at this period in 2015. Well, in this case, then you're up by a huge margin. If you invest a huge sum in 2015 right now, you're up about 100%, almost 2x, actually 2x already, okay? But if you're a huge believer in gold in 2011, then you're a bit unfortunate. Okay, in this case, your portfolio is only up, 7.3%, which in the past 13 years did not even keep up with inflation and in fact lost to inflation. Okay, so gold itself, you don't want to invest too, personally, I wouldn't invest too much. And those portfolio managers out there, they recommend about 5 to 10% depending on your own risk preference. So I'm skirting a bit on the financial advice side already. I just put a disclaimer over there, not financial advice. Okay, make sure you assess your own risk profile. Do you have any financial advice for students? I'm currently a student, monthly allowance 600, DCA around 200 ringgit every month for my investments, 100 ringgit for Versa Cash, 100 ringgit for Stashaway Flexible, 500 ringgit for S&P total world market. Well, I do not offer any financial advice, but I do have a few financial advisors that I can recommend to you. In this case, I will drop you their contacts later, okay? But my opinions on this, you got 600 ringgit, you're saving every month into low risk and high risk investments. I think it's pretty good. Just make sure if you are younger, right, you have more time to take higher risk, to explore higher risk options. So very often when we plan our portfolios, right, we tend to take not enough risk because we're too afraid of losing money. But if you're young, you're about 20 years old, you just graduated, right, or 25 or 27, you can actually afford to take those higher risk assets. Okay, but unless you're a conservative investor, you're close to retirement or whatnot. Okay, so hopefully the presentation tonight is beneficial for you guys. So for more information about all of these things, it's all in our Patreon membership. Our Patreon membership actually has a ton of different things. We have a personal finance encyclopedia over here, which contains all of the links and top articles that I've posted online before. We also answer all of your top questions, all of the anonymous questions from you guys. I compiled it into a PDF already. Plus, if you're a learner, you get to watch our weekly analysis sessions and you listen to our podcast as well. Okay, and that's it for my presentation tonight. Happy New Year, guys. I'll see you guys next week, same time, 10 p.m. Bye. Good night.